our conversation today is on the inflation report, where it says that our inflation has gone up by 24.23% in March 2025, despite the CPI rebasing. But joining me in the studio to further discuss this and take us just down a bit of economics 101 class, is Wilson Agaba. He's a business analyst and business consultant and financial analyst. Thank you for joining us on the program this morning.
Thank you for having me.
Okay, just before we came back on air, we're about to give us an idea of how is inflation calculated. Let's start with that.
Okay, so the question you asked was whether the rebasing was supposed to make any impact
on this, yes.
And I say it doesn't actually make any real impact apart from perception impact.
Okay.
Now, this is how inflation is calculated. So we take a base year. That base year is like a reference year. And then we'll say, okay, in this year, inflation was 10%.
Okay.
So every other year is calculated based on this year. So let's say the base year is 2010.
Okay.
And inflation in 2010, let's say November, was 10%.
Okay.
Okay. If it's 10%, then we say in 2012. How do we calculate the inflation in 2012? It will be the figure of inflation. Let's say it was 15 in 2012. Minus the figure in December 2010 that we took,
okay,
which will give you 5,
okay,
divided by the figure in December 2010.
Okay.
So you have 5 over 10, so that's 0. like 0.5%.
Yes.
So that's how you calculate inflation.
Okay.
Now, what was done recently is that we had a trend of the inflation growing over the years.
Okay.
So what we did, let's say the inflation has grown to 30%, and we have been using this 10%, here as our base. So each time we come and take 30 here, subtract 10 from it and divide it by 10, it keeps going up.
Okay.
So what we decided to do is to shift the mark closer.
Okay.
So instead of subtracting 10 from 30, maybe we are subtracting the one from a more recent year.
Okay.
We could be around 15 or 17.
Okay.
So the numerator of our fraction becomes smaller. And the denominator increases.
Okay.
By the time you do that and multiply it by 100, you have a less figure. It doesn't mean that the value of people's money have stopped depreciating by that 30 or 50%, which is a real figure. The inflation you see is the percentage of value that your money loses against the goods and services it can buy. So when you shift the baseline closer to the current day, in a situation where there have been an upward trajectory, you can help to decrease the value,
or at least,
but it doesn't reduce the impact on the fund itself. But why do government do this? One of the major reasons they do it is for perception, because they believe that if people perceive that the inflation is low, they may be tricked into investing in your economy.
Okay.
And when they invest in the economy, it can trigger a fall in the inflation in the long run, so using several other dimensions that time will not allow us to begin to go into. Exactly.
Okay. All right. So we already dug into the conversation, but let me give you a bit of idea of what the story is about, basically. So the headline inflation rose to 24.23% year-on-year in March 2025, up from 23.18% in February of this year, according to the NBS. This is a 105 basis point increase, defied expectations of a decline following the recent CPI rebasing and currency stability. Now, the core and food inflation trends say core inflation, that's excluding food and energy, rose to 24.4% in March from 23.0% in February. Food inflation eased to 21.79%, down from 23.5% the previous month, that's in February, despite rising prices of staples like ginger, yellow gari, ofada rice, and honey. Now, headline inflation rose 3.90% month on month, significantly higher than 2.04% in February, and core inflation rose 3.73%. Food inflation increased 2.2% compared to 2.5% and 1.7% in February, respectively. Now we have the regional highlights. Kaduna has the highest, Osun and Kebbi following next. Lowest is Akwa Ibom, Bayelsa, Sokoto. For the food, we have Oyo, Kaduna, and Kebbi State highest on the year-on-year food inflation, while Bayelsa, Adamawa, and Akwa Ibom are the lowest. Now, these are the, of course, urban. This is rural breakdown. Urban went 26.12% year-on-year, 3.96% month-on-month, and rural inflation went 20.89% year-on-year and 3.73% month-on-month. Now, you see, what do we expect now? They've done what they did earlier this year, which is rebasing, hoping that it would, somehow impact. However, what are we expecting from them again to see that, this doesn't keep on?
Like I said, rebasing is just one leg of that approach. When you rebase, you have created a perspective. There are other policies, policy apparatus that are supposed to support this rebasing to make it work, and as much as I know, the government didn't do more than that. We rebased, our interest rates keep going up, and what that means is that the cost of capital, you put it in a layman's language, how much it costs you to raise money to invest in real production will be high. And if it is high, how do you make profit? Okay, now, and you see, when it comes to certain commodity, the ones that are very paramount for us in Nigeria, they are very price sensitive. For instance, you can have flour, any branded flour that you use to make your swallows, and then you can have your regular maize, corn, and even cassava or the amala that you can go and mill. And so somebody that is processing this thing into a flour for your swallow, and he has so much to pay when he raises money from the market, to sponsor his production. And then at the end of the day, his price per kilo is so high. What do you think the average Nigerian will do? They'll go into the bush, buy cassava, peel it, wash it, dry it, grind it, and swallow is ready. So what happened? They have abandoned his product, and the product are going to expire on the shelf, but he still has to pay for the loans, or he closes business. So these are issues. This is one side of the finance. Then we are talking about security. Then we are talking about trust in the legal system. Then we are talking about policy consistency. Today is something, tomorrow is another. Then I don't want to go into the intricacies of our international relation, our diplomatic prowess and all of that, how it impacts on what we do at home. So all of these things are supposed to come together without rebasing to create a perfect perspective or perception for investors to come in. And when investors come in, it's one thing for them to come in. It's another thing for them to be able to drop things that permeate the system and actually create all this that we are looking about. I mean, you also look at issues like our financial system. Look at the electronic transfer system, money withdrawal, availability of cash, and all of these things. We are increasing charges on transfers. And we are trying to say, okay, let's bring cash into the system, so that the system will be robust enough, because the financial system, its job is to pull funds from place of excesses and make it available to places of need. So if I have an innovative idea that is going to help solve problems, but I don't have money, the financial system should be able to raise money from you, your friends, and all your colleagues from your 100K that you have put as savings in your account. Put all of them together, it amounts to billions, they loan it to me. I bring that idea to fruition, and then I hire people, pay them salaries, they have money to spend, they pay VAT on things, and the cycle continues and continues. All right, but where these things can't happen because there are other obstacles within the system preventing me from using that money effectively. And then another discussion we'll have some days in the future is Nigerians' perception of entrepreneurs. I hear a lot of discussion where people tend to demonize the entrepreneurs that are even trying to help our economy grow. Most of the people out there who don't work in a corporate environment like this hardly pay any tax apart from that. Where do they think the money that runs the government come from? America has the largest economy because they have over 200 multinational corporations operating from within there. Some of them, the annual budget of the company alone is more than the annual budget of 54 African countries.
You mean the entire continent?
Yes. So, how do you grow an economy without entrepreneurs?
Okay.
You know, that's another conversation for another day. But basically, the rebasing cannot work if all the other accompanying condiments, let me say it in the food language,
yes,
so we can understand.
Because we're going to the food inflation part of the conversation.
Exactly.
So now, why is food inflation easing while the core inflation continues to rise?
I will think two things. One, we need to look at the season. We are just entering April where planting will soon start. Okay. But you see the point from January to March, I believe what you were reading were mostly in February and March.
Yes, yes.
That's the season for harvest for most of the crops that forms our staple food in the country. You know, if you weren't doing irrigation, you'll probably be harvesting your rice around that time. You'll be harvesting yam, all the yams from 3-leaf yam to area yam to water yam, cocoa yam, all of them are harvested around that time. You harvest your sorghum and millet around that time. Maize is also harvested around the early November, December. You know, you can still keep it in your farm up to January, and you know, all of these things. So that harvest time, and in some form of pepper, ginger, and all of these things are harvested from late November to December, and then maybe early January. By that time, they are still moving it from farm and all of that. Farmers try to sell at the cheapest price possible so that they can buy input for the next season. So I expect that it should go down. And then, of course, at some point, then there was a dip in fuel price, and you know, when that happens,
yes,
transportation you know, decreases, and then you know, the cost price in the market is usually cost from farm plus transport, you know, and so when transport reduces, prices will reduce. Okay, and of course time also will not allow us to begin to dissect the component of the inflation itself. You know, because what the NBC does is they have representatives in several markets and communities across the country that turn in, you know, data every day. And what you see is an average of this data point. So it is possible that some may have increased so high, some may have reduced so low. Okay, so but when you put them together, so what you see there is average. Okay. If they open the data point for you, you'll be able to see more granular trends and perspective on what is happening. Okay,
so now what fiscal measures could support inflation and alongside control monetary policy rather?
You know, what the economics textbook tells us is that inflation is usually a result of too much money in the system. Okay. You know, we have demand pull and cost push and all of that, but they are all around this ideology that inflation is caused by too much money in the system. So when inflation goes up, what do fiscal policy authorities do? They usually try to make it difficult for people to get more money, and they bring other efforts to mop up money from the system. So you have the open market operation, you have all of those such things. If government have you know, bought bond from people before, they want them to buy it back. By so doing, they put money with government. You increase interest rates so that it becomes difficult for people to borrow. If you and I cannot borrow money, then we cannot spend too much. And then if you and I don't have too much, we will reduce our willingness to pay a particular price for certain goods and services, which will force the company to also bring down the price. You know, but you have a problem when the production is not commensurate to the demand. Because the basic rule of economy says that when demand is higher than supply, the prices will go up. Why? We all need it. And I have seen it. If you don't pay, I will pay. I will do anything to pay to have it. More than exactly. Really? So if production is going down, no matter how you hike the interest rate, you can only cause more problem. That's one leg of it. So if you hike the interest rate, more companies will close and leave the country, like they have done in Nigeria in the past 2.5 years.
Yes.
They have been doing that anyway, but we saw some very vital one went more rapidly recently.
Yes.
Now what that does is that the goods they produce are now in short supply. And then if you throw in the issue of our import tariffs and all of those things again, and the corruption around it, then there's another problem there. Now another thing that I have been advocating or mentioning, and of course I think I listened to an analysis on one of the international media one time, and one other expert was with me on that. How are we sure that the condition that made the theory that if you reduce the money circulating in the system still holds today? How are we sure that NPR, for instance, can still effectively reduce the money circulating in the system? We have not thrown in the disruption caused by fintech that makes money available to us that are not actually controlled by the system. In Africa today, we have a lot of money in people's pots, under beds, in windows, and wherever in the houses, and we are able to loan money to ourselves at a determined interest rate without necessarily coming to the bank. So how do you think the increase in interest rate can actually affect those ones? There are platforms for crowdfunding these days. A cryptocurrency, throw it into the net and you see the chaos. So it is about time for us to sit down and reevaluate the actual workings of the financial system and look for a mechanism that can help us control it effectively.
All right, it's been quite a very informative and educative time with you on the program today, but time won't permit us to continue and go furthermore in the conversation. That's the much we have for you on the program today. With me in the studio has been Wilson Agaba, a business consultant and a financial analyst, equally an education consultant actually, and he's been quite very, very informative. We'd like to focus about inflation this morning on the program. Thank you for joining us. Same time, same place tomorrow. Bye for now.